In this video, I'm going to demonstrate cost flow in a job order costing system using problem 750. Now, this isn't a typical problem where you first record your journal entries and post it to the ledger and determine your resulting balances. We have a snapshot of the general ledger, but we have our green here is where I have missing amounts, whether it's a debit or credit from a transaction or also from a resulting balance. And we need to fill that in and really test our understanding of cost flow. I want to mention here that we have the typical inventory accounts. We have our materials inventory, which is also known as our raw material, work in process inventory, finished goods. We have our expense related account of cost of goods sold. We also have our two overhead accounts, both our account that we accumulate our actual overhead, our manufacturing overhead control, and also our account that we apply overhead with, our applied overhead control. You also see 4 additional accounts, and the purpose for that is some of the transactions that affected the other accounts that I just mentioned also had a resulting credit to some of these various accounts that I have listed, whether it be wages payable, accumulated depreciation, accounts payable, or prepaid expenses. So we included them. We definitely didn't give the whole entire general ledger, but we wanted to include those accounts that will help us back into some of the dollar amounts that we have listed here. I'm going to go ahead and go through this just alphabetically, starting with A. And so we have our materials inventory account here, and we have a beginning balance of 8,000, and we have a debit that's missing. And a typical debit to materials inventory would be for materials that are purchased. So there's going to be one of two ways that we probably finance these, either by paying cash, which I'm not given the cash account, but I am given accounts payable material suppliers. So I feel like likely I bought these on credit. So let's take a look at what the credit was to this particular account. It's 100,000. So that also would be the debit to materials inventory because I was purchasing materials on account. So I filled in my first one, $100,000 debit to materials inventory. And then again, I'm just going to go consecutively to B, where I have a credit to materials inventory. Now, logically, again, the debit was for a purchase. The credits are typically going to be one of two things, either that material being used as indirect material and going to manufacturing overhead control, which you see this $4,300 here. Corresponding to this $4,300 here. So that would be indirect materials, or it would be direct materials that go into our work in process inventory. So I can do this one of two ways. I could sort through work in process, but knowing nothing else about it, I don't know what the corresponding dollar amount is. But now that I've filled in my debit of 100,000, I can also back into B just by saying, well, if I start with an $8,000 balance, I add 100,000 to it, I subtract 4,300 from it. That's the credit that was the indirect materials. I don't know what I'm subtracting for B, my direct materials, but I know the ending balance is $9,700. So I can back into the fact that that credit must have been $94,000. Again, if I look at work in process, that does agree with one of the amounts. So that must have been the direct materials that then went into work in process inventory. The next thing I'm going to look for is, again, going chronological, is go ahead and go to C, my wages payable. So again, I have most of my amounts. Wages payable is a liability. It would have a normal credit balance. So if I start with my 124,300, add in an additional credit of 36,200, subtract out a debit because a debit to a liability takes away of 162,000. I don't know what my credit is here. I'm not sure what that is, but I know my resulting credit balance is 119,500. So that's going to leave me with C must have been a credit to wages payable for 121,000. Again, I can think through what might have been some reasons for credit. Well, I might credit this account for salaries and wages related to sales and general administrative, and maybe that's the 124,300, but I also might credit this account for direct labor. And we can see this 121,000 here also agrees with the debit to work in process inventory. So that tells us that more than likely was direct labor. Also, I would credit this account for indirect labor, and I would see the $36,200 credit here also agrees with the debit to manufacturing overhead control over here. So again, that makes me feel like that was indirect labor. So I'm filling in information as I go along. I get to D. So D is when I apply the overhead, and this is going to be process of elimination. I'm going to credit the applied overhead control account and debit work in process inventory. Well, process of elimination, I already indicated the $121,000 debit was more than likely direct labor here. I already indicated that the $94,000 debit more than likely was direct materials. So the only other thing, process of elimination, is the $180,500 must have been overhead that we were applying to work in process inventory. So I'm going to show that as a credit for D to my applied overhead control. The next thing I'm going to shift to is going to be E. And I see E in two places. I'm going to start up here in my work in process inventory. And again, I can go through the amounts that I already know. Work in process inventory is an asset. It has a normal debit balance. The beginning balance was $22,300. Add in the $180,500 overhead apply. Add in the $121,000 of direct labor. Add in the $94,000 of direct material. I don't know what I'm taking out of it, so that's my X or my E here, but I know the ending balance is $17,700. So therefore, my credit to work in process inventory to balance this out must have been $400,100. That we're going to credit work in process inventory when we finish incomplete units, and then we transfer them to finished goods as a debit to finished goods. So that's also my answer over here. Now that I've done E, I can work towards F, which is the credit to finished goods. So my credit to finished goods would be for goods that are complete and are going to be sold to my customers. So that would agree with my debit to cost of goods sold. Again, the normal entry would be a credit to finished goods to remove it from finished goods and a debit to cost of goods sold to expense it against the revenue earned from shipping that to that customer. I'm going to continue along and go ahead and solve G, and that's the ending balance for finished goods. I had a starting balance of $14,200. We added in $400,100 from work in process. We finished 402,800 units, so we subtracted that out, took them to cost of goods sold. So my ending balance is going to be $11,500 in finished goods inventory. I'm getting there. My inventory and cost related accounts I've already filled out, but I do have some missing accounts for some of these other items that were credited as part of transactions affecting accounts here. So I'm going to clear some space here to the left just to make it easier on the video for you to follow along. And I'm moving on to H. Well, process of elimination, if I have accumulated depreciation, would have a credit balance. If it had a starting balance of $204,100 and an ending balance of $235,700, I must have credited the account for an additional $31,600 here. And again, if I think about what might have been a credit to this account, well, it could be related to equipment used for sales and general administrative, but it also could be for equipment used for our manufacturing environment. And look, this agrees with one of our debits in manufacturing overhead control. So that also makes us feel more comfortable that we have found the right dollar amount. When we were depreciating perhaps our plant equipment, we were debiting manufacturing overhead control and crediting accumulated depreciation. The last thing that we need to do here is find our credit to prepaid expenses. Again, I can back into this by saying my debit beginning balance was $24,300. I need to have a resulting debit balance of $21,100. So I must have credited or subtracted $3,200 from this particular account. Again, thinking about, this could be related to selling general administrative, but on the other hand, do we notice the coincidence that this $3,200 also agrees with our debit to manufacturing overhead control? So that makes makes us feel pretty comfortable, unless it's a complete coincidence, that likely we had some type of prepaid expense, whether it be a utility expense, an insurance expense, a rent expense we prepaid in advance, was related to our factory environment, and now we're using it up by debiting manufacturing overhead control and then crediting our prepaid expense account, which is an asset account. And we filled in all our missing information.